Welcome back to another week in review. We're going to be looking at the trading week of September 22nd, 2025. And thankfully, at this point in time, contract roll is out of the way, FOMC is out of the way, and we have some fairly clear areas on this market for intraday and some higher time frames that look like can give us some decent trades this week. So I'll start off with data. We'll get this out of the way fairly quickly. So Monday, there's not much. We have a litany of Fed speakers all day Monday, so I would just keep in mind that we do have people speaking all day, but there's nothing particularly impactful that's scheduled from a market moving perspective. Tuesday, we have the Manufacturing Services PMI at 9:45 a.m. and Rich Manufacturing Index at 10 a.m. Powell is speaking at 12:35 on Tuesday, so just keep that in mind. Not sure what he's going to say. I haven't looked into it, but I just know that he's there, so I'll be aware of it. Wednesday, we have new home sales at 10 a.m. and then crude oil inventories at 10:30 a.m. Thursday, we have the GDP print and jobless claims and existing home sales at 10 a.m. 10 as well as 10 a.m. to 4 p.m. onward. We have 4 Fed speakers the remainder of the day. So just keep in mind again, a lot of people speaking on Thursday, a lot of talking heads. Friday, we have the PCE price index scheduled to print at 8:30 a.m. And then we have 10 a.m. consumer sentiment, 1-year inflation expectations. So big things this week that I'm paying attention to. We had a very large, in my opinion, decision made on Friday. And I'm not talking about the actual macro decision, like the decision of the 25 basis point cut was priced in. That's what was expected. That's what they ended up doing. So there was no, surprise to the market going into last week. Again, I was saying in the last video, I truly didn't know. 25 was always expected. I truly didn't know what the market's reaction was going to be going into that. I didn't know if it was going to be something where it could be a sell the news event. I didn't know if maybe we would see a surprise like a 50 basis point cut. I had no idea. I knew it was expected, but I didn't want to go in guessing that something different was going to happen. What we did on Wednesday, to me, is fairly important. So this huge excess low that we put in on Wednesday basically says to me, after that decision was made and after the preceding price action, the following price action, pardon me, after that decision was made, is that this market has zero interest in selling. So I think if we were going to try and sell the news, it would have been more based around that. It would have been a bigger unwind to the downside if this market had any inclination that it wanted to sell in the short term. So where this puts me right now, at least from a bigger time frame perspective, is in the camp of I'm looking for dips to buy. And I think until we lose the Fed day low, so until basically we're under 66.40s, I have no real interest in looking for higher time frame sells on this market. I think intraday, there's absolutely going to be short opportunities as we potentially form a trading range, form some balance. And I'll talk about some opportunities on the short side I think that could present itself. But from a bigger picture, I see a lot of people online looking for, a huge sell from here. Maybe they get it, maybe they don't, but I have no interest in trying to fade this market on a bigger picture perspective, on a higher time frame perspective, on a swing short perspective. I have no interest whatsoever in trying to fight this move up as long as we are holding this gigantic excess low that we put in from the Fed day. So this 66.40 to 66.10 area, last week's low, until we're below this, in my opinion, I don't think we should be looking for larger sells on this market. So with that being said, let's talk about where we're sitting on higher time frames and potentially some opportunities that we could get on either side of this tape. So if we go into, I'll start with ES. If we go into the daily time frame on ES, this trading range and this extension that I've been talking about for months at this point in time, we're hitting into the 200% extension from this. We're also into 2 deviations away from yearly mean. So this blue line here, this is also including, so this is a continuous chart. So this includes the rolls. So this is going to be obviously there's going to be gaps in volume traded between these, but just keeping in mind that we are extended into the second deviation away from yearly VWAP. and we are also extended on the NASDAQ as well. So initially this week, I think some caution is probably warranted in looking for straight continuation upward. But again, as far as like from a bigger picture perspective, I'm not looking to really fade this market on a bigger picture until we lose that Fed day low. So what we could easily see starting off this week is consolidation up into, after this huge decision made and big, grindy move up, we could easily see some distribution up here, and we could easily see potentially some balance in a trading range form. So where I'm interested in trading this week is if we're failing to make new weekly highs. So basically, if we're failing up into 67.30s into the M period spike base of 67.26s. So if we have, a nice push higher, if it's going to happen, it probably happens on Globex, as it seems everything happens in Globex. But if we have a nice push higher that fails and we see some buyers get jammed up into this current all-time high and we can't stay above 26s, basically if we can't accept away from this big M period spike away, then I think what we could look for is some rotational shorts back down into last week's value to 67.05s and potentially start looking for some fill in of last week's profile all the way down into last week's POC at 66.70s. So two things really: if we're failing up at last week's high, if we're failing new weekly highs, if we're failing that M period spike base, then we could get some rotations intraday from a short perspective down into the meat of last week's value, back into Friday's lows. And again, where I'd be interested in looking for potentially a bigger long trade would be into the meat of last week's value, basically back into this LVN area we have right here, into the FOMC daily high, into 66.80 to 66.70. So basically want to see if we have a nice low form somewhere into 66.80 to 66.70 to have a nice long trade put on, and then again just stay long and look for those continuation moves higher. And then the intraday short rotations for me would be looking for, if we're failing up into 67.30s and the M period spike base, then we could easily get that wash move down and take out some of these late buyers as well. But the bigger thing again is that basically anywhere inside of last week's value, I'm going to be looking for good lows to buy, and I'm not looking to really fade this until we're rejecting this huge excess low. So if we start offering below 66.40s, whether that's next week or forward, I don't know. But this to me would be the line in the sand for buyers down into 66.40 and the FOMC daily low. This is what you'd want to see. If you want to sell this market, if you're dead set on, putting your life savings into puts, as all of Twitter seems to be doing, this is what you want to see fail. You don't have to try and catch the top. I tried to do this as a newer trader so many times, and like it's so incredibly difficult to find major tops in the market. It's not really worth your time, in my opinion. I know it's sexy to have the short trade to beat the market on the downside. Guys, it's not worth it. It's not worth trying to pick those tops. You really want to see things fail. You want to see a lack of acceptance above value. You want to see the market reject going higher. You don't have to try and pick the top. You can wait. You can wait it out to see, okay, we're offering, prior daily lows. We just put in, daily has gone from one time framing up and we've shifted to balance. Okay, so the market obviously wants to take a breather here. That balance range starts to break down. Okay, the market is starting to reject the value forming up here, seeking value lower. That's what you want to see. You don't have to try and pick every single top to post a screenshot. It's not worth it. It's not worth your time. I will die on that hill. So if that's what you're trying to do, and that's, if you've made money doing it in the past, if you're going to make money doing it again, that's fine. That's not how I trade, and that's just not how I recommend people try and make a living, because people blow up doing that, and a lot of people have already lost a lot of money trying to do that in this market as it is. So no reason to sell this, in my opinion, on a bigger picture perspective until we start losing FOMC day lows. That's how I'm looking at this. I will be looking for good bids into basically 80 to 70s if we start testing the meat of last week's value. Potentially a rotational short up into fails of last week's high. If we're accepting outside of 27s, again, I will stay long and I will just continue riding those long trades as we extend higher with an ultimate final target of 68.40s. So If you think this market can't go higher, maybe you're right, but a lot of people have said this market can't go higher for the last few months, and they've gotten obliterated as it's gone higher. So I have no reason to look to fade it until we lose that low. That's how I look at this. And then intraday NASDAQ, it's going to be the exact same plan for me. So again, we have a big gap up as well that's unfilled. But again, I'm really not looking at all to fade this market on a bigger picture perspective until we're losing that FOMC day excess low. So the same idea will be here for me on the NASDAQ. Whichever seems to form better risk is what I'll look at next week. But if we're failing at last week's high, and again, if we're failing the M period spike base, basically this 880 to 850 range, if we see a decent offer form here, if we see a lot of volume get jammed up, a lot of late buyers get jammed up, then I think intraday short rotations back down into last week's value. Friday's VWAP for sure at 787s and last week's value at 27.7 or 24.750s, and potentially fill in some of last week's range, potentially even fill this gap. Potentially I'll be looking for those decent lows to form around Friday's low, or potentially a gap fill reversal down here from 24.600s to 24.550s, again to look for those bigger, better long rotations that we could potentially get. And I'm not going to look to fade this market on a bigger picture perspective until we're losing this Fed day low. That's when I think things change. The market, in my opinion, when we see something definitive like this, when we see that amount of excess get put in, when we see that amount of acceleration away, when we see the pure lack of ability to do something that you potentially would expect it to do, if you were looking for a sell the news event and you saw this and it does the opposite, to me that's looking for continuation higher, and we'll continue looking for continuation higher until we start to lose it. So that's how I'm going to look at this market currently. I'm going to try and keep it really high level. I'm going to try and keep it really simple. Look for decent lows to form, potentially fade last week's highs, considering we are extended, considering we are at a place in the market where we could take a little bit of a breather. That's entirely possible. I am not bearish in the slightest until we start losing 66.40 to 66.10. That's how I'm going to play this. So hopefully that helps. A little bit of a quicker video this week. If you find the video helps, like the video, comment if you have any questions, subscribe to the channel if you haven't. I appreciate your time. Thank you very much.